Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment. Today, Wednesday the 24th, we're heading into the long holiday weekend. Just a few business days really left in the month of May. Then we'll be straight into June. I'm going to cover two items very quickly today here. Always, I like to talk about the grains and the cattle, but then I'm going to have a sidelight on some of my customers, clients have been asking me about gold and metals. So let's start with the corn. Corn remains in a dismal 25-cent trading range for the past 9 months. If you look at a chart, you can see what I'm talking about. If you look at new crop corn, which is December, doesn't like getting above 395, doesn't like going below 375. So we may be stuck in that trading range, unfortunately, until we get through the middle of June. We have two crop reports in June, June 10th, and then also June 30th. Those are two big numbers. You throw that in with any sort of sustained weather problems, be it too much rain or not enough rain, that's the catalyst we're going to need to break out of this range. Now, if you're a producer, you go to bed every night, you're hoping we're going to break above 395 and go back up to 420. I think that if I'm a producer, I want to make sure I've got orders out there to sell grain if it gets to profitable targets. Don't look a gift horse in the mouth. It may only be there for a while. If you're worried that you're going to sell grain and then it's going to explode higher, you know, the day after you sell the physical grain, put a cheap call on. Spend 10, 12 cents, something to keep the upside open in case corn really goes. But if I'm telling my producers to make sure that, you know, figure out where your profitability is, because nobody needs practice farming. You know, it's a business, and you've got to make sure that you know where those targets are. And I think you have to have them already resting. Sometimes it'll get there and you'll think, oh, I want another nickel, and then you miss it. You miss the opportunity. So we may be set up for continued sideways choppy trade for several more weeks. Ditto for soybeans. Soybeans at a critical level as well. I would watch very carefully the 940 level in November soybeans. If we settle below 940, that opens up the door to more selling by the managed funds. Managed funds are short grains. Everybody knows it. The whole world knows it. That Commitment to Traders comes out every Friday. You can see how much they're short. Right now, as I'm sitting here talking to you, they're short a couple 100,000 contracts of corn. They're short about 130, 140,000 contracts of wheat, and maybe 30, 40, 50,000 contracts of soybeans, which isn't a lot. So that's what we're stuck looking at in the grains. It's weather. We're range bound and waiting for the weather. Livestock. We're heading into a long weekend. We've had a really, really good rally. I was just talking to a client. If you go back to where we were in June, cattle had a, let's see here, a $43 rally, $42 rally in feeders. That was a great rally. We've given back some of it. Fat cattle, which is live cattle, we had a $25, $26, $27 rally. Those were good rallies, and I think that if I'm a producer, I'm making sure that I'm protecting those levels moving forward. If I'm a speculator, you know, I'm watching the technicals. I think that's the key. These markets where we get some movement, giving you an opportunity to scalp the market, you've got to be very, very disciplined. And then I'm going to pull the car over and talk real quick about gold, and then I'm going to hop. Gold. Everybody likes to talk about gold. I've seen some stories out lately on the wire. Some people talking about, you know, one guy's talking about $2,000 gold. The other guy's talking about $200 gold. You know, at the end of the day, the people that make those prognostications, lots of times they're looking for the big move, and then they can say, well, yeah, I saw that coming, and you know, you should do business with me because I have such foresight. I would stay away from those types of big prognostications. At the end of the day, if they think that it's going there, there's nothing stopping them from going to the bank and talking the banker into giving them a bunch of money so they can make a bunch of money on their idea. I lean more towards looking at what reality is. Reality is telling us that gold is stuck at a trading range between roughly $1,400, certainly $1,300, and about $1,200. I'm not too excited about getting long or short gold until we break out of the trading range. That being said, if gold's moving around in a $100 range, there's some trading opportunities there. So long story short, I would resist the big temptation to say that gold's going back to where we were in 2015 when we were at in 2011 when we peaked out right above $2,000 an ounce, and vice versa. If we were to go back down and go below 1,200, I'm not immediately going to be saying, "Oh my goodness, we're going down to $200 gold." I think more importantly, I would continue to watch that trading range. Gold is really more of a currency hedge than anything else, in my opinion. And so that's one thing I wanted to cover because I had some people ask me about that. So looking forward to having a nice long weekend. I'll talk to you guys after the holiday. Have a great weekend. If you want to get in touch with me, look me up online, Chris Robinson.